Day trading strategies are very popular for the simple fact that you can trade during the day and exit when the market closes, sleep comfortably at night, knowing that your capital is safe and sound. In this video, I will teach you a simple, profitable day trading strategy. And if you stay till the end, I will show you how you can implement it in any trading platform. Welcome back. I am Ali Casey from StatOasis channel. And although I am an algo trader and I teach algo trading, but I understand not everyone is suited for algo trading. First of all, you need the infrastructure. You need to learn the platform. Sometimes you need to learn to code. So simple strategies that can be implemented without code, without trading platform backtesting are really valuable, especially for beginners. And like I promised, this will be a simple day trading strategy on the S&P 500 futures. Now, although I'm implementing the strategy on futures, you can theoretically implement this on any derivative of the S&P 500 index. The S&P 500 is the most liquid index and can be traded through many derivatives, ETF, double ETF, triple ETFs, and futures, micro and mini, and options, and so on and so forth. So I'll leave it up to you how to implement the strategy. I'll just show you the rules for this strategy. Before we get into the rules of this strategy, let's discuss the overnight risk. Most people are afraid to hold any instrument overnight, any instrument in the financial market. There is usually this fear of holding overnight. In fact, some platforms like StrategyQuant X have this option with a tick. Like you can tick to build a strategy that exit end of day or that exit before the weekends, meaning on Fridays. But as algo traders, we cannot just go with anything we hear or read about or even see on YouTube. So to verify that holding overnight is risky or not, we need to test. Here we have the S&P 500 daily chart. And I will switch my strategy on. This strategy will buy the open and will sell at the close. As you can see, every day we buy the open, we sell the close. Every day we buy the open, we sell the close. And if we do this for the whole data that I have, which is since 2006, that's 17 years, this is the performance. We make $80,000 and our biggest drawdown is $38,000. That's 2-to-1. But if we look at the trade analysis, the total number of trades, 4,323. And on average, we are making $19. Now, this does not include slippage and commission, which is for sure this will be a losing strategy, but we are just looking at the edge of holding during the day or overnight. Now, I will switch my strategy to hold overnight only. So we'll switch this to 1. And now we are buying the close and selling the next open. Buying the close, selling the next open, and so on and so forth. So basically, we are holding only overnight session. So now we have these two windows. On the left, we have the daily strategy, buying the open, selling the close. And on the right, now we are holding overnight. So we are buying the close and selling next open. And looking at the stats, so both of them have the same number of trades, which is obviously is the same. We are using the same data. And coincidentally, both of them are averaging $19 per trade without slippage and commission. But we have some different stats. For example, the average losing trade here is 546. Here, during the day, it's more. It's 757. And the largest losing trade in the daily session, it's 7,000. And overnight is 10,000. So now if we switch to the performance, the overnight is making 81. Of course, that's nothing. Let's consider them the same. But here the maximum strategy drawdown, so the drawdown where we are holding the contract overnight is 52,000. And this is the maximum strategy drawdown during the day, it's 38,000. So definitely the risk of holding overnight is more than the risk of holding during the day, although we are making exactly the same amount of money. Okay, so from the test we did, holding overnight is riskier than holding during the day. Although we are making the same amount of money, but we are risking losing more overnight than during the day. Now we need to find out if this holding overnight riskier than during the day, is it true for all days or only for certain part of the week? Here is the optimization for the daily session strategy. So this is the strategy that holds during the day, buying the open, selling at the close. And the filters are from 0 to 5. So 1 is Monday and 5 is Friday. And 0 is holding all the days. So this is our original strategy. But now we find something really, really interesting. Not all the days are the same. And in fact, there is a huge discrepancy of buying Thursday open and selling Thursday close. If we only buy Thursday and hold during the day, we make $50 on average, while the rest are 19. And in fact, Wednesday is the worst, where we lose. And of course, this is not including commission and slippage. But still, this is definitely, it's a huge pattern. And this is not a coincidence. In fact, if I choose this, which is buying Thursday, if I look at periodical returns since 2006, so this is not a coincidence. This is not an overfit. If I buy Thursdays, on average, I make money. Yes, it's not enough money, but there is nothing here, no filter, no nothing. The fact that most of the years are profitable, that is a huge pattern. So this is already really, really good. And the trade analysis shows that we went from 4,000 plus trades to 888 trades. On average, we're making $50 per trade. Our largest losing trade is $5,000 plus. And this is the equity curve. Now let's go to the overnight side. So again here, 0 is all days and 1 to 5 is Monday to Friday. Original strategy is averaging $19 and net profit is 81. And again here we have a significant pattern, which is buying Monday close and selling Tuesday open. On average, we make $88 and holding overnight from Wednesday, that's extremely bad. So not all the days are the same. And in fact, if we click on this, so we'll hold overnight. And this is our strategy performance. We make $71,000, 8 to 1 return to drawdown ratio. Our trade analysis, around 800 plus trades, same like the day session. We're making 88. And our largest losing trade is now below 5,000. And again, this is not a fluke and it's not an optimization. Overall, all years makes money. So that is something built into the index. Now, why these patterns exist, I don't know. I don't care also. Some people do care. They want to find out the fundamental reason behind why such a pattern exists. I, long time ago, dropped this part where I look for the reason. If there is a statistical significance in the pattern, I will just use it. Now that we have these two patterns, that's a great beginning for a strategy. We have one during the day and one is overnight. And the nice thing, they do not overlap. So we can trade both easily with the same capital. But of course, like all strategies, we need to add a filter to the strategy to enhance one or more metrics of that strategy. So starting with the day session strategy, now out of hundreds of filters that you can test, I picked here 18 from different categories. So 0, that means no filter, and 18 filters. So in total, we have 19. And this is the result of all filters. So of course, this is our original strategy, $50 on average. And return to drawdown ratio is almost 2. So if we sort by return to drawdown ratio, so here we have 4 and then 3, 3, 2, 9, 2, 7. So almost 8 filters do better on this. And if we look at our average trade, so we had 50 before, all of these are better than 50. But we notice that some of them are really good. So this one, 7, 15, and number 1. So if we skip 117, which is a low average trade, so out of 7, 15, and 1, 15 makes the most amount of money, but 15 is my market regime proprietary indicator. And since this is a simple strategy, we will not use that. So let's pick 7 instead, which makes a little bit less money, but still very good. So what is 7? And this is filter 7, which is 2 down close in a row. That means Tuesday is a down close and Wednesday is a down close. Then we buy Thursday. And that will yield this average trade and this strategy. So if we choose this strategy, this is how it looks like. It's $40,000 with a maximum $10,000 drawdown. So that gives us 4 return to drawdown. The equity curve looks like this. We have a huge stagnation period here, but that's okay. And then total trades, it's 172. So we went all the way from 4,000 plus trades to 172 trades. On average, we're making 238. And this is our annual period analysis. Now, if we pick the overnight session and let's optimize. So here we have the overnight on, and we will optimize the same filters, and let's see what we get. So this is our original strategy making 88. And if we sort by custom fitness, which is return to drawdown, we have 10 filters that does better than the original strategy. And this time, all of them have good average trade. Let's start from here. So all these top 6 filters have great average trade. So 10 and above are my market regime filters. So 12, which is number 1, 11, and 18. Those are my market regime filters, and they are proprietary code. We will not use them in this simple strategy. So let's pick number 7, which is the next best thing in terms of return to drawdown. But look at this one. This is making 62,000 and very close return to drawdown. And this is filter number 3. And what is filter number 3? And filter number 3 is extremely easy. If the close is lower than the 50-day moving average. So let's pick this strategy, and this is the strategy stats, $62,000 with 4,600 only in drawdown. So that's why we have the 14-to-1 drawdown ratio. And the curve looks much, much better than the daily session. 265 trades, on average 237. And our annual period is also much better than the other one. So here they are side by side, and we can see how the overnight perform much better than the daily session. And we can see how we have huge stagnation here. The curve here is always pulling up. So through rigorous testing, we find out that the overnight session is not as risky as they say it is. In fact, we make more money and our drawdown is less than if we are holding during the day, even though we applied the same filters to both strategies. Now, how to implement this strategy without a trading platform, without backtesting, without automation? Now, although you can implement the strategy in any trading platform, I picked this free charting software. It's TradingView, since you don't need an automatic algo to trade the strategy. So this is the S&P 500. The orange line, this line is the 50-day moving average. And if you click on indicators and look for day of week, you will find many indicators, and I picked these two. So this one puts a bar in the background. So if we scroll down, these are the settings. So I told it to show Mondays because that's what we are interested in. We want to trade Monday overnight. And there is another one, which is this one, and this one highlights the bar. Same thing. So show Monday, and you can pick and choose what to highlight. And you can see now, if we are above the 50-day moving average on Monday, we buy the close and we sell next morning. And so this is 2 weeks ago. That trade lost money. And this is a week ago, and that trade made a little bit of money. Now we are very far from the 50-day moving average. So the next month, which is December, as the time I'm recording this video, all Mondays should be above the moving average, and you can use the strategy for the next 4 Mondays in December. To learn more about pattern strategies, watch this video, and I will see you there.